the 4 hour. This is the 4 hour, right? When we're on the weekly time frame, we
Hmm.
saw that it was the pattern was a rising wedge. Then all of a sudden on the 4 hour, now we found a double top. So the pattern can change, eh? It doesn't have to be necessarily the same pattern throughout.
Come again. Repeat your question. You said on.
On the weekly time frame, we
Hmm.
looked at as a rising wedge. There you go. It's a rising wedge.
No, no, it's an
Then
uptrend.
on the
It's an
it's an
uptrend,
uptrend.
not a rising wedge. Yes.
Okay. I
Here
thought
we are
because they were converging at the end there, we called it a rising wedge. So it's just an uptrend.
on
So
on
it's a diagonal
on the weekly.
uptrend.
On weekly, it's an uptrend. The market is creating
Yes.
higher highs, higher lows, higher highs.
Yes. Yes. Yes.
So we're expecting a shift to the downside direction, looking at the market behavior, what it's been doing.
True.
Yeah.
This.
Yeah.
And then when we went down to the 4 hour, now we saw a double top forming.
Okay.
Okay, so I was just saying that the
Yes.
trend, the market pattern does not necessarily stay the same. It does change with time frames, eh?
Yes. And get each time frame, it comes with its own signal.
Yes.
Yes. So if we have
Okay.
a pattern, let me tell you how I connect this, right?
Okay.
So if we have a pattern, Mr. Wutsilo is back.
Yeah, 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 yeah.
Okay, let me put it this way for you so that you can understand. Isn't it we have a pattern here, right? When we
Yes.
have a pattern, Ankara, the pattern keeps poking between the support and the resistance, support and the resistance, right? This is what it's doing.
Mm-hmm.
Mm.
So since we have touched for the third time on the resistance area, we expect the market to drop and go touch on the area of interest down there on the support, right?
Yes.
So this is what we want here. And this is how this rising wedge moves. And it keeps on, as it moves, it keeps on becoming very small.
Yes.
You understand? I don't know if I make sense.
Yes, you do.
So when we expect this to come down here, and then when we come to H1, remember we're already sitting here, right? We are here at the resistance. Now, this is
Yes.
where we need to find some reaction from the market to see exactly what the market will say about this area of interest where we are sitting, right? So if the market didn't want to break here, if the market didn't want to make a reversal, it wasn't going to give us equal highs. It wasn't going to. It wasn't going to break the structure.
I see how you connect now. Okay. Okay.
You understand? It was just going to continue to give us some signals that I'm going up, I'm going up, I'm not going down. So we looked
Mm,
at here, we had a lot of factors of course. First thing that they did here, right? That I'll tell you. Look at this. They had an impulsive move from here to here. But if you look at here at the end, all of a sudden, there's this small body candlestick that is being formed. That says what? It simply tells you that the momentum, the buying momentum, it has reduced.
yes.
You understand?
Yes.
It simply tells you that the buying momentum has reduced.
Coach,
Yes, coach.
can I ask you a favor?
Yes.
I don't know if you're gonna have enough time. Can I analyze me your record?
Yeah, but we're still doing, until we're still explaining USD JPY.
Yeah, no, it's fine.
Yeah. So the minute they give us these equal highs,
Coach, you're no longer sharing screen.
okay, sorry about that. So the first reaction that I got from here, right, as they approach this high, it's the doji candlestick. That was the first reaction. The second one, now the markets all of a sudden loses momentum when it gets here. But still, I wouldn't enter and just sell when they do that. I will still wait, right? Then the market comes and create a new higher low. I'm still not entering. I'm not convinced that these people are selling. Then these people, they go create equal highs. I'm still not entering. I'm still not convinced. But there's already some signs that these people, they want to make a reversal. Now, they break the structure, right? When they break the structure, then now I start being like, oh, there's something interesting here. As they breaking the structure, they already gave you equal high. This is an M pattern. We've got a neckline. I'm still not entering. I'm waiting patiently. Then these people come back and retrace back into that area. Then I find some factors of confluence. Then I go with them. Then I've got enough technical tools or an factors of confluence that tells me that we could execute that trade.
Yes, clear. That is very clear. Thank you.
So where to now with USD JPY? This is our next anticipation, right? This is our next anticipation.
Yes.
We take the Fibonacci, we hold it from where the impulsive move started to where yesterday it ended. I want to show you something, right? So yesterday, we anticipated a pullback to the 50%. Akiri, which happened, right? The market went back, touched even to 61.80%, but got rejected. We can say we touched that 61.80. Then they made an impulsive move to the downside, right? Remember our TP was here on the first, on negative 27.00, but they went and touched the last TP. Can you see it?
Yes.
I need you to understand something. When I apply this fib retracement, I want you to see something, because you guys will think I'm just putting the line there at the end. No, my focus, it's here. It's within where the market started to create the impulsive move up to where it ended, where they made a retracement. The other two lines are not set by me. The market is the one that automatically put it there to say this is where we have turned. I have held the fib retracement from where the market started up until where it started the retracement back into this. This is where my focus is. All these red lines, the market just put it. I told you that the negative 27.00 is the first TP as you are putting this fib retracement. Then the negative 61.80 is the second TP, right? So we have hit the second TP. Now, if I may ask you, what is the next step that we are going to do? Because we still have a continuation to the downside, according to me, on USD JPY.
We have to retrace the impulsive move.
Thank you.
That happened there.
Thank you. So what do we do now? We shift our fib retracement. We do what? We shift our fib retracement back into where the market started the impulsive move up until where the market retraced now. This is what we're going to do, right? Then this is our previous lower low. Then the market says that's 61.80. Then that's where I'm expecting the market to pull back into before we had an impulsive move to the downside. Where is our first TP? This is our first TP. Where is our second TP? This is our second TP right there. So what are we expecting tomorrow? We're expecting them to shift, to continue to the downside. Something like that. But before you execute the trade, here's the thing that you need to know, right? Do not make the mistake of executing a trade because it's on a downtrend like this. It's creating lower lows like this, right? And tell yourself that when it gets here, it's going to bounce without finding other factors of confluence. When the market approaches this area, you still wait patiently when they come here. You watch what they're doing. There's going to be some other factors of confluence that are going to happen here. You've got your EMA as the first thing, right? You might see the market break above the EMA and then reject. That's another factors of confluence. That's another signal. You might see them break just like what they did here, as you can see. What did they do here on this factor of confluence? They broke out of that EMA. Can you see?
Yes.
They broke above.
Yes.
People think, it's broken. Then they reject, they come down. So if we find something like that, it will be nice. But if we didn't find it, it's fine. But as long as the EMA is still trade above the market trades below the EMA, it's still okay. When we get here, we get some candlestick formation, right? We're still riding with them down, right? So what you can do, you can still, from now, because we already have the bigger picture, there's no need for you to go and focus on bigger time frames. What you need to focus on is these small time frames now. You focus on H4, H1, right? On H1, you also pay attention when the market comes here. It will communicate. You must have communication from all this time frame. If when the market approaches here, it doesn't communicate with any factors of confluence, don't sell. Because you are not controlling the market. You're not the market maker. In this instant, you can even drop as low as even 30 minutes. I want all the factors of confluence. From 30 minutes, 1 hour, 4 hour, when they approach here, I want it. I want to see all the time frame communicating, saying something when the market approach here. And there mustn't be any time frame that says this and the other one says this. The other one says we are buying, the other one says we are selling. Because already the bigger time frame, they say we are going down. I want you to write this down, right? I want you to write this down. Are you guys writing?
Yes, sir.
Buchilo, are you writing?
Yes.
Mr. Buchilo, are you writing?
Yebo.
Okay. So I need you guys to write this down, right? Write as a subtitle or subheading and say time frames to consider in order to execute a trade. Time frames to consider in order for you to execute a trade. And then you say monthly, weekly, daily, H4. I'm going to repeat. Monthly, weekly, daily, H4. These 4 time frames that I've mentioned, these are the time frames that you need to analyze in order for you to understand the market where it's going in a bigger picture. You are not finding an entry on this 4 time frame. You are analyzing. I don't know if I make sense.
Yes, so basically you're telling us on the monthly, weekly, daily, and 4H, we're analyzing to see the trend if the market is going to be going down or up.
Exactly.
And on the other one, the lower ones, that's where we are executing to find an entry point.
Exactly. When you drop down to small time frame, you drop to H1, 30 minutes, 15 minutes, You are trying to find an entry. You are not trying to find where the market is going. You're not trying to understand where the bigger picture of the market is going. Another time frame that you could also use as an entry is H4. You could start your entries from H4, H1, M30, M15. You can go as far as M15 if you want accurate entry. But I don't remember anything as accurate in the market. There's no such thing as accurate entry. It's just higher probability entries. So you understood me, right?
Yo.
Yes, sir.
Yes.
And I'm going to ask you about these time frames. So please bear in mind that I will ask you about this time. So if you didn't write down, I'll ask you randomly one day. And if it happens that you don't have it in your notebook, there's going to be a punishment on that day that I'm going to do. I'll kick you out of the class for that day. I'll do it. Because I've noticed there are people who are not writing down information. And these things, you can't grab them in one day. That's the truth I can tell you. So if you didn't write down this information, I'll ask randomly. And then when I ask you, I'll tell you to go and refer on your notes. So I hope you guys understood what I meant, right? I said monthly, daily, monthly, weekly, daily, H4. You analyze these 4 time frames to understand where the market is going, to understand the bigger picture of the market overall. When you drop down to H1, 30 minutes, 15 minutes, you're trying to find an entry. I don't know if I make sense. Or I'm speaking in
Yes. No, you make sense.
or I'm speaking in parables. I don't know.
No
It's
parables. Straightforward.
It's a straightforward thing. Guys, tomorrow be prepared. We're starting with the candlestick formation.
Okay.
Be prepared. We are starting with the candlestick formation. I'm so surprised we've covered a lot in a short period of time. We're starting with the candlestick formation. The other remaining market patterns there, guys, these are things that you know, some of it. This sideways trend thing, you already know how to trade it. I can't go back. We have spoken about sideways trend a lot. Am I lying or I don't know?
No, you know.
No, you're
that's
not.
true.
Come again?
I'm saying no, that's true.
Sideways trend, we've covered it. Guys, this rising wage, it's an inverse of the falling wage if you look at it, right? I think here they made a confusion because there's a rising wage and there's a falling wage. Then they come back again, they say there's a rising wage. But what I am noticing between this rising wage that we have from the continuation from reversal pattern, continuation, and then bullish rectangular bullish pennant. What I'm noticing from the falling wedge, which they say it's a continuation, right, is that if you look at where the bigger movement is coming from, when we're looking at the rising wedge, can you see? I'm talking about the rising wedge below the falling wedge. Can you see it? So meaning the market was coming from an uptrend. Then it started creating that rising wedge, but acting as if like it's changing the direction to create an uptrend. Then all of a sudden it breaks and continue to go down, because if you can look at them, there's no there's no target between below and above to show that you can either enter it above and below, if you can look at it. I don't know if you get my point, what I mean. If you look at descending triangle, it has a target above, it has a target below. Do you get that one? If you look at descending triangle, it is a target above, it is a target below. Are you still with me?
Yes, sir.
If you look
Yes,
at
we can.
Yes.
if you look at ascending triangle, it is a target above and it is a target below.
Mm.
So when you look at the continuation pattern, the falling and the rising wedge, they are different. These two, right? In which way? In a way that if you look at where that black line is coming from, it's coming from a downtrend. Meaning the market was creating an uptrend because it comes from down, going to the upside, then it start creating this falling wedge as if like it's creating a downtrend. Then all of a sudden you can see they say the entry is above, the target is above, meaning the stop loss is below. This one, it means it's just a continuation pattern. The market act as if like it was going down, meanwhile it's still continuing to go up in that particular area. I'll still love for us to revisit this falling wedge, eh? This type of falling wedge. I would really love. Let's try to find this type of falling wedge. Falling wedge.
So, coach, you said falling wedge, the market is coming from an uptrend because you see the stick from the bottom is going
Yes,
up. So
yes,
it's actually a continuation of uptrend, just went a
yes,
bit on the side and then it carries on. Okay, I see.
exactly.
Okay.
Let's try to find it. I don't know if we'll find it or not, but these patterns, I've noticed something. They are mostly formed on these small time frame. These bigger time frames. Okay, let me open it this side so that I can actually see what I want to see. Okay, we are on the continuation pattern falling wedge, right? Falling wedge. Falling wedge, falling wedge. I saw something that looked like it, but it's not. Falling wedge. So we can only find a falling wedge on an uptrend, according to me, according to my understanding. We can only find a falling wedge on an uptrend. You know, it's difficult to find these patterns, eh? Uh, maybe we should try 1 hour. Oh, we are on 1 hour though. It's hard to find them, you see. You can see, right?
Yes, we can see.
So yeah, that's the falling wedge. Because it was coming from an uptrend, then it started creating this structure, then it breaks above. It's a continuation pattern, as they said. Right? They are very difficult to find these things. But once you can understand them, you'll be able to identify even when the market is trying to do that. And I think it's time I print out my patterns and in hard copy and have them on my desk. This is too small, but it's still the same thing. This is very small. If you look at it, very small, but it's still the same thing. See, it's a continuation pattern. So yeah, we're still gonna go back and touch some of these patterns, né? Because I want to make sure that by the time you leave, you guys are fine, right? We're gonna take a day, one day, just look for these patterns. Everyone just try to find a pattern on their own, right? Here's another pattern. Can you see it? Which one is this one? It has equal highs. Which one is this one?
It's ascending triangle.
It's
Ascending triangle.
Thank you. That's ascending triangle. Which one is this one? It's falling wedge, the one that we're talking about now. It's a continuation pattern. You see? Can you see it?
Yes.
It's a falling wedge. It's a continuation pattern. Nice. Let's call it a night. I'm tired. You? I can die on this Zoom call. Tomorrow we're starting with the candlestick.
All right. Thank you, coach. Good night.
Thank you.
Very beautiful evening.
Analyzing my European.
Yeah?
Analyzing my European.